Hello traders, Gary Wagner here. Approximately 1:20 in Honolulu, 6:20 in New York. It is Thursday, January the 7th, 2021, and this is the daily report for gold and silver. Considering the strength in global equity markets today, along with dollar strengthening, I believe the metals performed quite well. Add to that Bitcoin going to a new all-time record high, and that has to be taking some of the sparkle out of gold. Nonetheless, we had gains across the board in gold and silver futures. We'll talk about our upside targets today, but first to current pricing. Considering today's strong performance in U.S. equities, global equities, dollar strength along with Bitcoin that has traded again to an all-time record high, I'm very satisfied with the upside performance we have seen in both gold and silver today. Currently, we are at $1,913.90, a net change of $5.30. We are still actively trading. Today's high, $1929.60, and the low, $1907.50. Our stop is still in play, which is sitting at $1902.20. When we look at silver, that actually had the best performance between gold and silver, gaining about 20 cents at $27.25. We do have some reasonable profits in this position, so I'm going to look very carefully at moving this stop up sooner rather than later. Forex or spot gold is at 1912.80 and change. It is active. When we look at GLD, that dropped about 42 cents per share. A 1/4% is currently at 179.48. And then lastly, SLV is at 25.26 per share after losing roughly 8 cents per share. Let's take a look at our technical studies. Traders, even though gold closed below its open with a very narrow range today, it did gain approximately $6.20, currently at $1914.80. There are a couple of things that are noteworthy and we can ascertain from this chart. The first thing is when we take a look at the high that was achieved yesterday, even though it sold off dramatically and recovered, the high itself matches precisely with a recent top, and of course this top came in, I believe, the first week of November. And I believe that that is our current level of resistance, and these are minor levels, with the next one above it just below 2,000, and it represents these series of tops here. Of course, we have one top, but some areas at 2,000, so we are in a congestion area in terms of various levels of resistance. I don't believe it will be difficult, given the right fundamental undertones taking the market higher, to see us go through these various levels. I think that the one that we will have to watch if gold continues to trade higher is the price that comes in based on this top right here. It occurred at the end of August and comes in at around $2,020. On the support side, without a question of a doubt, the 100-day moving average continues to really indicate solid support. We've seen that on a couple of occasions over this trading week. We can also see that when we did break above that right at the beginning of 2021, we did get a sizable jump, and a jump not only above that, but above 1941. And so 1941 I would like to see taken out and become support again, but for right now it is one of the levels of resistance. Another indication that we are still fully in rally mode, even with the ebbs and flows of the market, is by looking at a simple trend line. I'm going to start with this low here, attach it to this low, and then carry it straight up as best I can. And as you can see, we have remained since the beginning of December to trade above this particular trend line. Of course, if we extend it, it should take us to about 1975. That is currently my target for this particular leg of the rally. As I said, I believe we are in a fifth wave, but that fifth wave has a fractal quality to it, which means that it can be subdivided into 5 smaller waves. For right now, the goal in terms of upside is to break back above $1,940 per ounce. We were very close to being stopped out yesterday. The low today, of course, was higher at 1907. But for right now, I believe the best action is to maintain our current long and definitely not to move our stop yet, but to maintain our current stop placement in gold. We are looking at a daily candlestick chart of March silver. There are some similarities that we've talked about between gold and silver during the ascent. But one thing that is extremely noteworthy is the fact that when you look at the tact or the trajectory of this upside rally, it is much steeper than what we're witnessing in gold, with less kind of zigzags or ebbs and flows as we get to higher pricing. That's the first thing. The second thing that's noteworthy is you can see that the 50-day moving average does appear as though it is on a straight trajectory to cross back above the 100-day moving average. And if that were to occur, that would put, at least on a technical basis, for a fully bullish set of 3 moving averages, the 50-day moving average above the 100 would be above the 200. That tells you that you are in a fully bullish market scenario. Let's talk about resistance areas. Well, you can see the tops that occur right here. They come in at roughly 28. If we extend the line, we can easily see that this matches up fairly precisely. We've got a small top just above that. That, to me, is not as important as this particular top that comes in around $29. And then, of course, really the brass ring today, as it has been for a while, is pricing at about $30 per ounce. We're very close to that right now because we're at $27.25. We're getting close to $28, and we are not that far away from $30 an ounce silver. Interesting chart formation in GLD. Of course, as I've talked about in the past, I like to look at least a week or a 2-week chart because of the way it moves. And when you look at a daily chart, it is kind of sporadic. But here's what I find interesting. This is middle of 2011. And of course, the middle of 2011 was a point in which gold traded to its former all-time record high at about $1,920. Now, currently, when we look at gold, it is trading in terms of its last print at about $1,914. So very, very close, but yet we are slightly under that price. And this, of course, reflects when we hit 2088. In other words, I like the basic trend line or channel line that we can see between these lows here and the highs here. And I believe that we will continue to see GLD trade higher. Traders, lastly, I do want to take a look at a 2-week candlestick chart, this of SLV or the iShares Silver Trust. Although I believe that it has the potential to have a greater percentage gain than gold, what is odd to me is that it never challenged the high prices that came in back mid-2011 as we saw in gold. Right now, we have real resistance that comes in at roughly $28. We are currently at $25.26. Above that has got to be this basic top, and that comes in roughly at $33 to $34. The next level we would look at would be $36. While I believe it will go higher, my question is, will it reach the apex, meaning $50 an ounce in terms of silver? And if it does, why has it had such difficulty moving higher when we saw gold take out the old all-time record high? This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.